Who will win the AI race? Apple, Google, Microsoft, Nvidia, or Tesla? Welcome to my channel, Rudy Romo here. In this video, I will be talking about the following. Number 1, Nvidia's Q3 earnings. Number 2, the latest on the OpenAI, Sam Altman, Microsoft soap opera. Number 3, the possibility of Tesla merging with X.AI. And number 4, the huge loss by Jim Chanos hedge fund by shorting Tesla stock. In case you're not familiar with the shorting a stock concept, at the end of the video, I explain how that highly risky process works. Okay, number 1. Nvidia's Q3 results, November 21st, 2023. I include the actual numbers and outlook. The record revenue was $18.12 billion, up 34% from Q2 and up 206% from a year ago. Record data center revenue of $14.51 billion, up 41% from Q2 and up 279% from a year ago. Nvidia today reported revenue for the third quarter ended October 29, 2023 of $18.12 billion, up 206% from a year ago and up 34% from the previous quarter. GAAP earnings per diluted share for the quarter were $3.71, up more than 12x from a year ago and up 50% from the previous quarter. Non-GAAP earnings per diluted share were $4.02, up nearly 6x from a year ago and up 49% from the previous quarter. Our strong growth reflects the broad industry platform transition from general purpose to accelerated computing and generative AI, said Jensen Huang, founder and CEO of Nvidia. Nvidia is one of at least 5 companies that will be fighting for first place in the AGI world. Apple, Google, Microsoft, and Tesla are also expected to compete in that highly competitive and highly promising industry. It's safe to include Amazon and Meta in the AI race. In case you didn't know, Nvidia makes the premier GPUs in the supercomputing industry, and Tesla, along with Amazon, Microsoft, Meta, and Dell, are Nvidia's biggest customers. Number 2, here's the latest information on Sam Altman, OpenAI, and Microsoft. Sam Altman departed from OpenAI as CEO on November 16, 2023, following a board decision to remove him from that position. The reason for his removal have not been publicly disclosed, but some reports suggest that it was due to differences in opinion between Altman and the board on the company's future direction. Right after this announcement was made, Microsoft offered Sam the head position for their AI team. After the OpenAI employees found out about Sam's firing, close to 100% of them signed the letter, 738 out of 770 employees specifically, asking for the board to reverse that decision or they would leave and join Sam at Microsoft. The latest today is that Sam is coming back to OpenAI and the status quo will prevail. Since co-founding OpenAI, Altman has remained active in the AI community. He has invested in several AI startups and has spoken out about the importance of responsible AI development. Microsoft has not publicly announced a specific dollar figure for its investment in AI supercomputing over the next year. However, the company has said that it is committed to investing heavily in this area. Some reports say Microsoft will spend up to $50 billion next year on their supercomputing servers. In a recent interview, Microsoft CEO Satya Nadella said that AI is the most important technology of our time and that Microsoft is investing billions of dollars in AI research and development. The race to develop the most advanced AI technology is intensifying, with major tech companies like Microsoft, Google, Amazon, and Tesla all vying for the top spot. Microsoft investments in AI supercomputing is a clear sign that the company is determined to win the race. It is still too early to say which company will ultimately emerge as the leader in AI. However, Microsoft's commitment to AI research and development is impressive, and it is clear that the company is well positioned to compete in this highly competitive market. This brings us to item number 3, Tesla and X.AI. The latest hot theme in the Tesla community is the possibility of Tesla and X.AI forming a more formal alliance in an effort to better compete with the likes of Amazon, Microsoft, Google, Meta, and others. When asked about this today, Elon Musk promised he would discuss this with the Tesla board of directors. This alliance, if it becomes a reality, would give Tesla shareholders equity in the new X.AI company, which now showcases Grok, a highly promising large language model. With Microsoft announcing it will invest tens of billions into AI, it will put additional pressure on X.AI and Tesla to do the same in order to stay in the race. As more details emerge, I will include any new developments in my future videos. And now on to item number 4, Jim Chanos and his Kinnikos hedge fund. Jim Chanos is a well-known short seller and founder of Kinnikos Associates, a hedge fund that specializes in short selling. Chanos has been shorting Tesla stock since 2011, and he has been a vocal critic of the company's business model. Basically, shorting a stock means the investor is projecting the stock will drop, not rise. James Stephen Chanos is an American investment manager. He's president and founder of Kinnikos Associates, a New York City registered investment advisor focused on short selling. In 2021, Chanos told CNBC that Tesla was the biggest bubble in the stock market, and he predicted that the company's stock price would eventually collapse. However, Tesla's stock price has continued to rise, and Chanos' hedge fund has suffered significant losses. According to media reports, Kinnikos Associates' assets under management have shrunk from $6 billion in 2008 to just $200 million in 2023. This is largely due to the firm's losses on its short bets against Tesla and other companies. This has forced Chanos to close the fund and return any monies left to its investors. As the saying in the Tesla community goes, don't bet against Tesla. So what is short selling? Short selling is an investment strategy that involves selling a borrowed security with the expectation that its price will fall. The investor then hopes to buy the security back at a lower price and return it to the lender, pocketing the difference. How does short selling work? To short a stock, an investor must first borrow the shares from a broker. The broker will then lend the shares to the investor, who will sell them on the open market. The investor will now have a short position in the stock, which means that they owe the broker the shares that they sold. The investor must eventually repurchase the shares and return them to the broker. This is called covering the short position. The investor will profit from the short sale if the price of the stock falls between the time they borrow the shares and the time they cover the short position. This is because they will be able to buy the shares back at a lower price than they sold them for. Example of short selling. Let's say an investor believes that the price of Tesla stock is going to fall. They borrow 100 shares of Tesla stock from their broker and sell them for $100 per share. This means that they receive $10,000 from the sale of the shares. The investor now has a short position in Tesla stock. They owe their broker 100 shares of Tesla stock, which they must eventually repurchase. If the price of Tesla stock falls to $50 per share, the investor can buy back the shares and return them to their broker. This will cost them $5,000. The investor will have made a profit of $5,000 on their short sale. Risks of short selling. Short selling is a risky investment strategy. If the price of the stock goes up instead of down, the investor will lose money. The potential losses from short selling are theoretically unlimited, as the price of a stock can theoretically rise to infinity. In addition, short sellers must pay interest on the shares they borrow from their brokers. This interest expense can eat into their profits, and it can even cause them to lose money if the price of the stock goes up. Conclusion: short selling can be a profitable investment strategy, but it is a risky one. Investors who consider short selling should carefully consider the risks involved before making any trades. And thank you for watching. If you enjoyed the video, please hit the like button, share, and subscribe so that YouTube algorithms will get it to more people. If you disagree with any of the points made, or if you have any suggestions on how to improve future videos, please comment below. The material and thoughts shared here are based on my own personal research and factual to the best of my knowledge. Please do your own research.